Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy that you can join us today. Before I welcome today's guest, I'd like to thank our 2025 President's Council sponsors. And these are companies that provide a tremendous amount of financial support to the California MBA, in large part so that we can continue to be the strong voice for the real estate finance industry before the California State Legislature and our regulators. So advocacy being the cornerstone of our association. So please join me in thanking our 2025 President's Council sponsors. And those companies are Amerihome, Consolidated Analytics, Funding Shield, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kiter, and Western Alliance Bank. Thank you all so much for your support. We really appreciate it. And speaking of our President's Council sponsors, I have one of them on our guest as a guest today on our podcast. I'd like to welcome Anthony Ho, who is Managing Director and Chief Credit Officer at Amerihome Mortgage. Anthony, welcome.
Thank you, Susan. Great to be here.
Yeah, thank you. So I always kind of like to get started finding out about how people got into the mortgage business. So love to hear your journey into this industry.
Sure. I joined the mortgage industry back in 2005. I joined Countrywide Financial, and that was actually right after finishing my MBA at UCLA. So prior to joining the mortgage industry, I actually had my background is actually in chemical engineering and literature. That's what I studied in my undergraduate days.
Oh, wow.
And my experience was in industrial engineering, like working in refineries and chemical plants and doing IT consulting. Those items I did prior to going back to business school. And so after business school, joined Countrywide, joined a team that was called the Business Transformation Group. And that team was focused on doing cross-divisional process improvement projects within Countrywide to help grow the business. So that was pretty back in 2025, before the financial crisis. There was, of course, a lot of growth in the industry, and Countrywide was really trying to build out sort of its effectiveness and its processes and its systems. So it's a pretty interesting time to join and to be part of.
Interesting time to join the industry for sure, because you saw everything good and then everything, we all fall off the cliff there during the financial crisis. I had this job then too, so I can empathize with you. I remember those days well. So I remember, speaking of the ebbs and flows of the industry, right? In 2023, when interest rates spiked and volumes, dried up, and I remember the saying then was survive till 25. And here we are in the beginning of 2025. Volumes are not quite where lenders thought they might be a couple of years ago. What do you anticipate for volumes for the balance of this year?
Yeah, I would expect volumes to be pretty similar to 2024, given that we've seen interest rates, stay higher for longer in terms of mortgage interest rates, right? So, say in the high 6% range. So for the balance of this year, I would anticipate that rates most likely would stay in that range. And with that in mind, yeah, pretty similar volumes to last year, maybe a 1.7 trillion, 1.8 trillion type size market.
Well, at least it's not going in the wrong direction. We'll take flat over, losing ground on this for sure. So
For sure.
in markets like this, how can lenders stay competitive when there's a challenging market like this?
Well, you had mentioned survive to 25, and I remember hearing that as well back in 2023. And so I've thought of another term. I'm going to call it strive to thrive.
I
And what I
like it.
mean,
Okay.
thank you. So what I mean by that is 2022, 2023, 2024, they've all been very challenging times for the industry, and we've all seen that. And so a lot of the companies had to essentially make a lot of changes, right, compared to 2020, 2021, where we had really high volumes. So at this point, I think what we've observed is that a lot of companies have had to make hard decisions, right? Make, changes to their staffing, and really look to find efficiencies wherever possible in terms of, reducing cost. And so that's why I say, kind of this strive component of strive to thrive is to continue those efforts to whether it be through automation, through looking to partner with other companies, right? In some cases, it may make sense to outsource certain functions, given
Mm,
that because of scalability. So I think that's really, if you look at it from a continuous improvement perspective, just kind of keeping a nose to the grindstone and trying to find further ways to utilize the information and data that's available through automation, to try to improve the cost situation. But with that all said, it's still a challenge given that folks have already largely been at this process probably the last few years or so.
yeah, always finding ways to create more efficiencies, right? To reduce that cost to originate. I think that's just top of mind for all
Yes.
lenders, especially the IMB world. Um, I don't feel like we can have a conversation about the mortgage industry anymore. We don't talk about artificial intelligence. AI is in so many facets and continues to just deepen into our industry. What are your thoughts on just the use in general of AI in the mortgage industry?
Yeah, I mean, I think there's a lot of potential for AI in the mortgage industry. I mean, clearly we've got so much data to start with, right? Whether it be origination
Yeah,
data, servicing data, capital markets data. So from the perspective of being able to build out new models, we've already seen some of the usages of things like chatbots, both facing borrowers as well as folks using them internally in terms of folks being able to put in queries or questions and get responses back, whether utilizing information about like guidelines as well as just internal information. So I think those are some of the sort of early usages that we've seen, but in general, I'd say it's relatively early days. There's still a lot of question marks in terms of the regulatory approach that's going to be taken to AI models, as well as even just internal control frameworks for AI. So I know that there's, my general thought is that working with your institution's model risk management group to develop, in essence, the guidelines for how these models will be used, because that I think is just especially critical. Documentation of how the models were developed. The CFPB, of course, has mentioned that can't simply say that it was an artificial intelligence model and that's why something was done, right? There needs to be something that
right.
supports the reasons behind, especially, and so I would say that of a particular area, loan decisioning is one where I believe that, and I think folks are treading carefully because of the implications of how was a loan decision made. If AI is going to be utilized to support that, there needs to be a lot of background structural information to support that. So
Right.
so all in all, I still think a lot of great potential, but I believe that companies are moving forward cautiously so far.
Yeah, it's definitely penetrating every aspect of the mortgage industry. And you bring up a good point, using AI in automated decision making. That's a piece of legislation that we're going to be working on this year, which would be, is serious implications to the mortgage industry. As you say, it's like, we do use automated decision making, but there are, policymakers are also taking a close look at that and what the end result is for consumers. So it's good that everyone's paying attention to what the output from their AI implications within their companies.
Yeah, absolutely. And I think it's just, the advocacy that the CMBA is doing is great because it's in everybody's interest to have clear guidelines on how
Yes.
these models should be used.
And part of our job is always education, right? We have to educate these policymakers on the mortgage industry because that's also a factor. They don't understand kind of how, and that the non-depository lending is different than depository lending. And it keeps our advocacy efforts keep us busy for sure. Anthony, Amerihome's been a long-time supporter of our organization, been President's Council sponsors along with Western Alliance Bank for several years. We're very, very grateful for that. Can you share with our listeners why the company decides to and continues to support the California MBA?
Sure. Yeah. I mean, Amerihome, of course, started in California. We, of course, have offices in other parts of the country now, but originally from California. And we're longstanding supporters of the CMBA. I think, to me, the two big areas, advocacy, which we just talked a bit about, and also education. Education in the form of webinars, in the form of programs. I know a number of folks in our company that have participated in the California MBA Future Leaders Program. And I think that's fantastic to be able to give up and coming leaders the opportunity to be exposed to so many different areas of the mortgage business. I know we always talk about it, but I think it's true, right? The mortgage business, to try to know everything about it would take, who knows, maybe more than a lifetime, right? As far as trying to learn all about it. And so on that education piece, just trying to grow these future leaders, trying to give those opportunities for the mortgage community, I think is fantastic. I think back to, back when I joined Countrywide even, there was a lot of activity, with training because they literally had, a number of folks joining every single week. And after we had the financial crisis, which was, of course, a difficult time, what I observed was that because the marketplace, the mortgage volumes had decreased, there was less of a ability for individual companies to invest as much resources, I believe, into the education component. So California MBA as well as the national MBA, I think you guys have done a fantastic job of being able to be a wonderful resource as times have evolved and become even, I would say, even more valuable, for the mortgage industry.
Excellent. Well, thank you, Anthony. I really appreciate you being on Connect. Thank you so much.
Thank you, Susan.
And thanks to all of you who joined us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.